Hi traders and welcome to the Technical Analysis Market Watch on Friday the 4th of August. So for a week that's generally quiet being a non-farm payroll week, we've seen a lot of action with a downgrading of the US economy, but markets have recovered somewhat. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so I'll start out here with the Aussie USD, and you can see that we hit the support level that we thought we probably will after last week's massive sell-off. The down pressure continued on, and we really pretty much hit the mark straight on. It's bounced back a little bit now, but realistically, this has been a massive fall. Like when you're talking about basically from a 68.80 level in the space of about 3 weeks, we've gone all the way down to 65. So it's been a very, very big, heavy sell-off, but it's got plenty of friends. The euro's also been belted, of course, but the dollar strength has continued to weaken these dollar-based pairs. And realistically, what we see from here, it's difficult to see it breaking past this level without a sustained move in the dollar index moving up. So we know that, historically, this has been the 65 mark has been a very, very strong level for it. We know that for a fact. We can see right through here. We've got very strong support at this level here. We had resistance at this point here. You can see that was effectively almost an inverse head and shoulders that did eventually break through, but we had very, very strong reversals here. So we know that this is a roll reversal straight up. So it's relatively important in terms of the market touching the 65 cent mark. When it did that, we would expect that we can see a little bit of a bounce. So really what we want to be looking for here is an opportunity for a bit of a rebound back to this other key level here, which is around the 60 cent mark, 66 cent mark, sorry. So what we're looking for here is a change of trend on a smaller time frame, of course, a 1 hour or a 4 hour change of trend. We can go down to a 1 hour chart and look for that series of higher highs and higher lows. It's trying to do that now. You can see we've had a move up. It's pulled back to the 20 moving average and trading above the 20 moving average. For me to be convinced that we can get there, it needs to break this high here. So when I'm talking about a move of a lightning bolt, we're looking at about the low, the high, the higher low, which is at a 20 moving average, which is ideal. And then, of course, a break of this level. So it's only about a 30 or 40 point scalp, really, to get to the level where I'm talking about, which is a 60 cent mark, 66 cent mark. But realistically, though, it's a pretty solid trade if we can get a close above this level. So it's very important that it does that, though, first. I wouldn't be just jumping into this trade. If it fails at this point here and breaks down below the 20 moving average again, I'd be looking at shorting opportunities back down to the 65 cent mark. So it's pretty straightforward on the Aussie, really. But it's done what it needed to do. It got to a level where we would look for a reversal. Now the dollar, the 1 hour needs to basically continue the pattern, break to a new high, give us a lightning bolt, and then we can trade up to around this green line here, which is around that 66 cent mark. With a little bit of confidence. I'm not really keen on shorting it any lower than this. I would let it break through. Even if it did actually break down and continue moving down, I would let it close below there and test this level from below. So let it break down, come up and test it again. That would be the better trade. I wouldn't be looking at taking the first trade on this one because it is very, very strong. So just keep that in mind. We'll move over to the US dollar CAD now, and the continued strength is basically very, very prevalent here. We've broken up all the way through, but well and truly above the 20 moving average now. Last week we were hovering around this level, thinking it was going to go long. It certainly did that. And this is the level that we were looking for. You can see here at around that 133.50 area, that was going to be the target for the long, obviously. And we know that because that's the first place is going to find trouble, right? We know we've got support right through this level here. All of these levels found bouncing support off this level, you can see. So we know there's historically a very strong level and a key level of interest. So when we know that, we can trade accordingly. And now, realistically, on a bigger time frame, you could potentially look for a double bottom formation here. It's at the neckline right now, so you can see the two bottoms obviously very clearly. If it breaks above that neckline and comes back and tests it from above, that would be the better trade. Then we're looking for a move that would equal that length. Okay, so we're looking for a move basically up to around that 135.50 area, which would be quite a good trade. You can see that we've got a lot of price movement through this area here. You can see the resistance points at this level, and that would be the initial target of that double bottom pattern. But already it's hit the neckline, as you can see. It's hit the target if you're taking the short-term scalp. But now I would wait for it to actually break through and test it from above before I'd get excited. If it turned around from here, I can understand that could happen as well. If we get a series of lower highs and lower lows on a 1 hour time frame, that's a very strong resistance point, of course, because we know we've got support there. Then I'd be looking at trading it down to the 20 moving average. So that would be a pretty straightforward trade as well. So good trading on the CAD, and hopefully you're able to catch some of that. All right, we'll move on over to the US dollar yen now. And this has also seen quite a bit of strength this week. You can see that we've had a pretty good move all the way up to where our first resistance point is. Sold off a little bit at this point, but look, we've had a US economic downgrade. So a lot of these currencies are being affected a little bit. Probably bolstered by that news. But we've seen a little bit of recovery in the indices, which we'll touch on a little bit later. But yeah, in reality, we're in a non-farm payroll week. We know we're generally a little bit slow, so we're probably seeing more action than we normally would anyway. It wouldn't surprise me at all to see this turn around and get up here. I wouldn't trade it long. It's hit the target anyway. This is the target that we were aiming for, which is that 143.20. Okay, clearly hit that, and looking the goods from this point onwards. That's where you would have taken profit after the break of this zone here. Hopefully you took that as well, because we talked about all these last week. Now, if we do get a continued weakness, the 20 moving average is going to be the first target, but I would probably keep my trades fairly short on the US dollar yen right now, because realistically, we're going into a very, very important week next week that's going to be affected by currencies, even though it's indice based. So keep your trades fairly tight and short on this one. If we see a move down, look for the 20 moving average as the first point of call, which is around that 140, 150 by the time it actually gets there. That's moving up quicker. Now, and if it does break above this level again, I would wait for it to retest it from above to below. That becomes a support level at that point there, and then we start looking for that 144.80 level as the next target for the way up. So keep your range in between the 20 moving average and the 144.50 would be my recommendation on the yen, because I think that zone will probably represent the next at least couple of days trading anyway, until we get a bit of a breakout move. The big earnings are going to be done and dusted by next week, and of course we'll have a non-farm payroll done as well, and then we're going to probably see some trending starting to happen. The market is dying to trend by the looks of it. Over to the dollar index now, and continued strength again, no problems here. Came back, tested that level there, which is perfect trading. Off it went, broke past the 20 moving average. Once it did that, we were in, and obviously the euro is the trade that we're talking about here, so we don't have to harp too much about the dollar index, but of course it did the job. It's still got a little bit to go to actually hit the overall target of 103.30, but you could have easily taken profit around this level here. And like I said, we'll go to the euro straight up, because that's where we're really trading. You can see that we've broken down, obviously broken the 20 moving average good and proper, came back and retested it there. That was the trade, that candle right there. Easy sell down to this level. Look, the 109.20 area is a really, really good zone. You can see that it's touched it several times here. And it was the 109.20 has been touched probably more times recently than nearly any other number in the last few months. It's been a really, really good trade. You can see it right through there. So that was the first take profit target. But of course, if you wanted to continue on, the 108.60 area is also a very good representation of a support level. If we see any more weakness from here and a continued weakness, if we go to a 1 hour time frame or something like that, and it's pulling back to the 20 moving average and the daily is still weak, the target is going to be the 108.60, right? It's a pretty straightforward target, because we know we've got very strong support here, bolstered by a lot of levels of touching. Okay, very, very strong role reversal. And still, like I said, you would be forgiven for still being in this and looking for that target. So while the momentum remains strong on the way down on the daily, that's a pretty good trade as well. So hopefully you're able to catch that short. That candle right there is the one we always talk about. Touch of the 20 moving average after a break, and bang, down we come. All right, nothing short of a trade above the 50 moving average, and trading above the 20 moving average would convince me to go long on the euro at this stage. Okay, US 500, the last one. Look, it's doing its darndest to get above the 20 moving average again. Obviously, the downgrade of the economy was a bit of a problem for it. It certainly sold off, but it is trying to recover. And this last session, you can see it's effectively a pin, a hammer, call it whatever you like. But what that is price action trying to get above the 20 moving average again. It doesn't surprise me that it's done this, because obviously non-farm payroll in the next trading session is going to be very, very important for the US market. And it's probably going to try and find consolidation zone around this level until we actually get the news. Now, if the news is good, I'd expect that we're going to be trading above the 20 moving average. And if it's bad, we're probably going to make a new low. Either way, we're happy to trade this one. And what really happens on late or early trading in New York on the Friday or Monday, if we wake up on Monday and the market is trading above the 20 moving average again, we'd be starting to get bullish and looking for highs of about the 4,600. So scalping opportunities up to the 4,600. But if the market is weak and doesn't like the results and it's trading under the 20 moving average on Monday, I would be looking for this target around here, which is around that 44.50 level, which is around the peaks of these two peaks over here. That's the level of these peaks. I'll pop a horizontal line there so we know what we're talking about. That's the level I'd be looking for. So if we get a daily close below the 20 moving average over the weekend, I'd be looking at targeting this zone here over the course of the start of the week, with a couple of very big earnings happening next week as well. But yeah, the signs are starting to get a little bit weak if that happens overnight with the non-farm payrolls. If we're closing below the 20 moving average, I'm not so sure good earnings are going to save it, and they're really NASDAQ based anyway. If we get a daily close above the 20 moving average, though, on Monday, that's a different story altogether. And then we'll be starting to target the 45.80 in the first instance, and then up to the 4600. But good trading coming up. Hopefully you're able to catch a few of these trades because we have been talking about them. They played out quite nicely this week. Hope everybody's had a great week's trading. Have a great weekend, and I look forward to seeing you all next week.